Hello, everyone, and welcome to the live stream where we are here sitting in the dark, holding a seance and using our Ouija board to predict the future of real estate. I'm coming to you as a communist worker bee, and Jason is coming to you as a sheeple, a very common costume this year that we are seeing everywhere. So welcome. Thank you so much for joining us. And we're going to take some of your questions and talk about something very interesting today. Jason, can you take that mask off?
No, I'm told that I am required to wear it, and I'm just one of the sheeple, so I'm going to obey and comply, and just
that's just too bad.
Wear the mask, yeah. I wouldn't want to infect you, even though we're not in the same room, obviously.
Oh, but you might infect me from a distance.
You know what we really stand the risk of doing, Ashley? People listening could get infected with good ideas. That would be spooky. And the powers that be do not want that, do they?
We would not want that to happen. We would not want people to start thinking for themselves nowadays.
As they say, a good idea is like a virus. In fact, Seth Godin, I think I'll put the mask over the mic. Well,
there you go. It's going to censor.
They won't get my germs, right?
Perfect.
Okay.
Yeah, and censor
the mask on the microphone here.
Right.
Yeah, that's what we need. The microphone needs to be masked, so that we make sure that good ideas don't always get through.
There you go.
Yeah,
that's right.
Okay, enough of this silliness. I'll put it on here for decoration. I don't want it to mess up our sound.
You could set it on fire. That'd be a good use for that.
Oh, that would be, but then we'd absolutely get kicked off. We'd be kicked off the air. Yeah.
Too bad.
So anyway, some scary stuff is happening for renters right now, isn't it?
It is. So if you are a renter, you might have had your rents increased. So we've got a report from Bloomberg about Invitation Homes. And Invitation Home is the largest owner of U.S. rental houses. And due to housing shortages, which are persisting, they have raised prices by nearly 11% in this quarter, according to a statement.
That is shocking.
That's a lot.
And Ashley, you know what this is? This is yet another example of the wealth transfer that is going on. These giant institutional investors are going to be just buying up as many homes as they can get their hands on. They're building them ground up to build for rent properties. And they are going to have duopolies and pricing power beyond comprehension. And pricing power is a good thing if you're, when you buy stock in a company or you own your own business, you certainly want to have pricing power. But when you are the general public and you have a scarce resource like housing, and people must have a place to live, it's really not optional. Sadly, for too many Americans, it has become optional, meaning the homelessness problem. But that's another discussion. They're just going to cause people to slip further and further down the socioeconomic ladder. And Ashley, I'm sure you remember the great movie. I try to watch it not every year, but it's on every year around Christmas time. It's a Wonderful Life with Jimmy Stewart. Isn't that a great movie?
It is an incredible movie.
Yeah, it is. It's awesome. But remember Pottersville? And Mr. Potter was the evil landlord. He was kind of like a Scrooge type, right? And he could get away with being the evil landlord because he had almost a near monopoly, right? And we've seen this happen with these technology companies. They've basically got near monopolies. Try going down the street. I mean, Facebook, people say, well, if you don't like Facebook, don't use it. Well, give me the other option. Instagram? Oh, wait, they own Instagram too. Oh, you don't like Google? Don't use it. Oh, what do you want me to do? Use YouTube? Oh, they own that too, right? It's just disgusting. The absolute semi-monopolies that these companies enjoy, and the fact that they're coordinating with each other, which is technically illegal under antitrust laws, but that applies to price fixing, not fixing of people's thoughts. and the kind of message they can send, right?
Mhm.
Yet certainly no one would deny that Apple, Twitter, Google, and the rest are coordinating with each other to control ideas, right? To
Mhm.
make sure that the idea virus they want is the one that gets out there, but
Mhm.
the other one doesn't get out there, right? So, yeah.
Right. You
So the
can't
same
hear
is
them
gonna
out.
happen in the rental market and invitation homes when you've got they don't have to have a meeting and price fix because when American Homes for Rent reads the news release about invitation homes, what do? They don't have to talk to each other on the phone and say, "Hey, let's all raise rents and screw the consumers,"
Mhm.
right? They just need to read the press release and say, "Oh, well, now we can get away with raising our rents too. If they raise them 11%, let's raise ours 10 and we're still more competitive."
Mhm. So let's break that down. This 11% though, this is a national average. So it's going to vary, from market to market.
Yeah, and that's 80,000 homes, which in the overall market is a drop in the bucket. I mean, there's
Mhm.
about 15 million single family homes owned by mom and pop investors, maybe 16, 17 million. That number might be a little higher by now. So the institutional investors, relatively speaking, are still not that big a deal, but they are gaining ground quickly. And
Mhm.
I guarantee you, the next time there is a recession, because they will be able to borrow at lower rates than traditional buyers will, who are getting Fannie
Mhm.
Mae and Freddie Mac or USDA loans or VA loans or FHA loans, which are still pretty great. They're still going to be able to borrow even cheaper because they're insiders and they've got
Mhm.
that insider privilege. They can go to the public markets. They can literally go to the Federal Reserve and do all kinds of things. So it's just they're going to be able to seize the opportunity uh, as market cycles occur. And if anyone ever heard my podcast about it, where I interviewed that Rolling Stone reporter who did that fantastic article. I think it actually turned into a series of articles called "The Great Bubble Machine," and it really targeted a lot Goldman Sachs and how they were engineering bubbles in the economy, not just the housing market, but the stock market, the bond market, everything, right? So that they could become enriched by this. They run up the prices through easy credit policies, and then a collapse inevitably occurs, as it did during the Great Recession, and then they gobble everything up. Well, all the normal consumers have had their credit ratings screwed, and guess what? The credit rating is like the social score in China, right? That allows
Mhm.
you to borrow to buy a house or a car
Mhm.
or get a credit card. And so, well, normal Americans can't buy, they gobble up tons of inventory and then they just jack the rents up more and more. So this is a wealth transfer, people. It's
Mhm.
you're witnessing it right now. So the decision everybody listening needs to make is, which side are you going to be on, right? As much as we complain, we're not going to change it. It's happening.
Mhm.
And the only question here is, what side are we going to be on, right? We've got to buy properties so we control these super valuable assets that
Mhm.
everybody in the world needs.
Right. If you're watching today, write to us in the comments. Where do you think rents are going? And have you had any recent experiences? Have you raised your rents, or has the rent been raised on you, or are you thinking about it? And Jason, what I would ask to you is, for other rental property owners out there, if they're raising their rents, should we be doing the same thing for our rental properties?
Of course. Now, as much as I've complained about this so far,
Mhm.
actually, this is great news for investors because mom and pop investors, Ashley, have actually been pretty terrible at raising rents. And property managers are even worse at raising rents. Now that these institutional players are in the market, they use software that monitors their portfolios for rental yields, and there are several of these software systems out there that have been commonly used in apartment complexes, larger apartment complexes, but they constantly raise rents, And they have all sorts of ways to do that. And they add on all sorts of extra fees and so forth too. And these are things that mom and pop investors could be doing and probably should be doing. And now they will have a comp set by these institutional investors that will allow them to raise rents better. And I hate to say it, I sort of at the beginning of this took the size of the renter, which I think is terribly sad. But listen, if you're renting, I want to help you not be a renter, and I want to help you be an investor. And that doesn't necessarily mean your own home, by the way. It means own investment property that you rent to other people. Maybe you still rent your own home because you like the flexibility and all the benefits of renting, which there are many. There's no shame in being a renter, but you need to be in the game. You need to own property, at least that you rent to other people if you're renting your own home. Okay, so hit the like button either way, whether you're a renter or an investor or want to become an investor, because that's what we're here to help you do.
Let's take some comments from Building Builders CIP. Not sure how to say that.
I almost said Chip. Builders.
Chip, so did I know.
Yeah.
1137.
Is that number 1137?
1137. I've raised my rents for the first time in almost 2 years, 18%. Wow.
Wow. Okay, look. Building Builder SIP. Where do these names come from? I love it. So good for you. You'll find that that's a lot easier and a lot more tolerable if you raise them every year consistently and by a smaller amount. It's more tolerable to the tenant. I'm curious, and please write a comment below, Building Builder SIP. Did you have to re-tenant your properties? Did your tenants move because of those increases, or did they just stay? Because an 18% increase to the same tenant is pretty significant increase. It really is. So I'm really curious. We'd love to hear from you. So please comment below.
Yes. And Eric Brown commented right after that. What's the best way to communicate a rent increase to a good existing tenant? Do you explain the reason for the increase, or just send a letter saying the rent will be increased to X amount of dollars on this date?
Yeah, great question. So, Eric, you're not obligated to, at least, I don't know, there's some pretty weird places around the country, like the Socialist Republic of California and the Socialist Republic of New York and a few others that may require you to state a reason or plead your case or justify it. I doubt that, though. I don't think we've gotten that nutty yet, but it's getting in that direction. I would just say due to increasing expenses, which is absolutely true, because, hey, look, your property has appreciated and probably your property taxes have been reassessed. Insurance costs have been going up. So, just due to increasing expenses, you can cite the inflation rate, whatever you want. It has become necessary to increase the rent. We hope, yeah, that's it. Just say that. Just write them a letter or an email. Do be mindful of any local laws that might require notice in a certain way. But usually if you're communicating with your tenant already via email, you can just do it via email. Okay. And be careful not to listen to your stupid property manager. If you have a property manager, the vast majority of them suck. They're pathetic.
Tell us what you really think.
Not that I have a strong opinion about this, but at least they're not as bad as the Wall Street crooks. That's what I can say for property managers. And there are some good ones out there, but there aren't many. Okay, I'll tell you that. And it's true of many professions, actually, not just property managers. Don't let them run the show. You need to run the show. It's like, how many of you are horseback riders, right? I've been riding horses since I was a kid. And, the first thing they teach you is you got to show the horse who's boss, right? You need to show the horse. You are running the show here, not the horse, because the horse will do whatever they want. And the same is true with property managers. Yeah.
Great. Okay. Yeah. Let's, Stephen C, 1137. Case in point, just turned over a property in Florida and the rent went from $1,100 to $1,600. What a great time to be a real estate investor.
Ashley, I'm glad you called out Stephen's question. And Stephen, that's great. This is another thing, folks. You may have to just re-tenant your properties, Mostly as landlords, we say, hey, look, you want to keep your tenants. And yes, you do, because the tenant turn is expensive sometimes, not always, but sometimes it is. And you've got to do additional repair and fix up work and things like that that you might not otherwise do. But not always, just sometimes. But the idea is definitely to minimize tenant turnover. However, at what cost? There becomes a balancing point here, right? Where it's a kind of a homeostasis. And some investors and property managers wrongly brag about how low their vacancy rates are. Well, that's kind of like a relationship. You say, oh, well, we've been together for a long, long time. Yeah, because you're tolerating a bad relationship. Okay. Maybe that's not the best thing. You should have some degree of turnover. Okay. I don't know. Maybe that's a bad metaphor there, but I said it. So don't give up $500 a month in rent to not have a tenant turn. Don't be scared of the turn. And this is just like with a relationship, a balance, right? Because the ideal thing is you stay in the relationship and you're happy, but don't sell your soul for it, right? It's the same thing with being a landlord. So don't be afraid of the tenant turn. Good point.
Great. Okay, well, so don't remain in the dark about real estate investing. Send your questions to jasonhartman.com/ask. And what did you pull up here?
Oh, well, before we go, Ashley, and I know we've got to keep this really short here, but before we go, just look at this interesting chart. So this just shows the Fed's balance sheet, okay, in yellow, right? And you see here, of course, we see the expansion of the balance sheet that just is psychotic. It's the hockey stick on the graph, right? It's the shape of the hockey stick here, right? It just goes through the roof when the pandemic hit. And it has been a massive expansion. There has been this massive expansion in money supply, in credit supply, in incredibly low interest rates that have increased the wealth gap. And it has made the rich a lot richer. And most people, sadly, are getting left behind. The reason we're doing our work is because we don't want you to get left behind. Okay. Now, look at what happened right after that. This is the US Zillow rent index, the white line, year over year, Y over Y. And you see, here's the Fed's balance sheet expansion, and just give it a little bit of lag time, and the rents look like a hockey stick too, right? These are not very far apart that these start to just mirror each other. And so what happens? You increase the supply of fake money, of fiat currency, just the way they did in so many places and times throughout history, not the least of which is Zimbabwe. Here's your Zimbabwe dollars, okay? Ashley, 100 trillion Zimbabwe dollars.
That's incredible.
Knowing that there was a time when one Zimbabwe dollar was actually meaningful. 100 trillion became worthless, right? It's incredible.
The paper printed on is worth more.
It's just paper. That's all it is, right? And so here you see this massive increase in rents and everything else because we've seen inflation just going through the roof.
Right. And it compounds, as you said in your podcast this week, inflation compounds.
It has a compounding effect. And I'm glad you mentioned that. Einstein said that compound interest should be considered the eighth wonder of the world, right after the seven wonders of the world. And it's true because it just happens so quickly. So inflation does this, right? When there's 5% inflation in one year, then your baseline's 105%, right? And then another 5% goes on top of that. So it's a higher rate. I mean, everybody understands the idea of compounding, and inflation compounds, and inflation hurts people that don't have loans, mortgages, and they don't have assets. And it just leaves them behind. And, another part of this that is so disgusting about this wealth transfer, why is it that everybody who owns a property or buys a property can get a mortgage at 3%, give or take. Yet all of the credit cards are still 16, 18%, 20%. Why haven't those rates changed? Because it's a scam. It's a total transfer of wealth. Every time there's a crisis, the wealth transfer gets bigger and bigger and bigger. Look at what happened during the Great Recession 13 years ago. Look at what's happened in the past year and a half, and it's just going to keep on happening. So the moral of the story today is don't be left behind. Buy good properties, properties that make sense the day you buy them, and hold them and get those good 30-year fixed rate mortgages and take advantage of my strategy of inflation-induced debt destruction. It's a great thing. Any last questions before we go, Ashley, or comments to wrap it up?
I would just say, and also don't be afraid to take control of that property. So don't be like the angry communist worker bee that I am today, just going along with the hive mentality, or Zorro.
The sheep.
Mask.
I'm the sheeple.
That's, I see it. I totally see it.
Yeah. I'd like to write sheeple on this mask, right on the front in big red letters, C19 sheeple.
Covert operation. Okay.
Something else. All right, everybody. Hey, thank you very much. Happy investing. Appreciate you joining us.
Thanks for joining us.
Yep. Go to jasonhartman.com/ask if you have any more questions or comments, or be sure to check out the podcast and our other videos, and be sure you subscribe and hit the like button too. We appreciate it.
Thank you. Bye-bye.
Bye.